This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association. Your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Wednesday, March 22nd, 2023, and we're so glad you could join us for today's show. And in today's episode, I will have my conversation with Eric Raby of CLAAS. We were speaking at Commodity Classic in Orlando, Florida. We discussed the current state of the supply chain for ag equipment manufacturers. We'll also have a check of the ag weather outlook, but first, let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day, we are joined by Jacob Burks of agmarket.net. Jacob, I'm in charge of doing the midday markets here at the IARN, and when I looked at the screens earlier today, it was nothing but red. Did we close up in the same manner?
But if you want to consider the two corn contracts in the green as taking away the red full day of a red, then yes, we did have a little bit of reprieve at the end. We saw the exports come in today again. We saw China come in and buy some old crop corn. That did push the old crop corn to a positive point. So we saw that spread continue to grow. If you've seen the May-July spread, I think that spread is actually trading above 20 cents now. Yeah, so you're looking at 22 cents between the May and June. So that's something that we've kept our eyes on. We see the demand there in the old crop corn. Beans, on the other hand, took a bloodbath here today, down 25 points across most of the, over 20 points across all the complex there in the soybeans. $7.50 lower in the soybean meal. The soybean oil, July was down $1.65. So it's a very, very negative trade across the crush margin. You can blame a lot of that on good crops out of South America, lack of demand in China for the soybeans. Wheat market down 18 to 20 cents in the Chicago, down 8 cents in the Kansas City. So yeah, a very, very negative day across the grain complex.
Jacob, for you personally, on a day like today, is your phone just ringing nonstop? Are people trying to figure out what's causing all of this market movement in the way we don't want to see?
For us, we talk a lot about risk management. We've done a decent job of getting a large part of our production covered with most of our customers. So today's sometimes a day that you have to make some decisions. Okay, we have some good hedges in place. Do we want to roll these down? It's still March. We haven't planned. We haven't seen the planning intentions report. How do we want to handle the position that we have on? That's the phone call that I enjoy talking about. I enjoy working through. The call that I don't enjoy is the one of, hey man, we didn't get anything done, but what do we do now? And that's still something that we have to address. But that's the call that's tougher to answer, and how to be aggressive and make sure that we're not locking in, are not going to be able to sell 450 corn if that happens. So that's a tough call.
And Jacob, when we talk about the South American crop conditions right now, are we still looking at essentially the same thing that we were just a few weeks ago, where we know Brazil is going to have a massive crop, and Argentina, we continue to see those numbers go down a little bit as we get further through the process?
Yeah, I think that side of the hemisphere has been, has a pretty well known situation. Really bad in Argentina, pretty good in Brazil. And I think those, it's just like here, you start seeing, hey, we have a little bit of problem in Brazil due to wetness. We didn't get them to the port. We have some delays in harvest. We had maybe a little bit larger effect in southern Brazil with some of the lack of rain, some of the drought areas there. You look at it in Argentina and you say, hey, we knew it was bad. Maybe we get a little bit of pop up. Maybe it wasn't as bad. Maybe we got some timely rains in certain areas. Those type of stories are coming. Are we talking about a 30 million metric ton corn crop in Argentina? Or are we talking about 25, 24? So, those are the still conversations that we have to face. But I do feel like all in all, the good areas of Brazil have, at least put us to about a net zero as far as the year growth year over year. And so I think from South America in general, so I think it's making up for a lot of that negativity in Argentina.
Jacob, what did we see in the livestock markets today?
Well, I think you have to look at this whole day as a fear of recession day. You have to look at what we're going to find out here in a little bit, or we already have, of what the Fed did to interest rates, and I think that your risk off in most of the commodities is not so much just centered on what the managed money is doing. It's almost like a fear of the complex of, hey, we have the food complex, of our total economy, and people are just going to be tightening up their budgets, and we're going to push this thing a little bit lower. So, and the live cattle, down 15 to 20 cents, I would consider this a very good day. Technically, we look like we bounced off of the 200-day moving average in the June contract, and I think that could be very beneficial to the point where I think we could see some type of stability there at that area. I hope we do. Feeder cattle down 50 to 20 cents. The hog market, I don't know where this stops. This is just a continued downward move. $2 lower in June. There hasn't been a whole lot of positivity there. Even when you're hearing China having a ASF situation, potentially, our hogs still haven't caught a bid. I'm hoping that we see that pretty quick.
He is Jacob Burks of agmarket.net with our closing market analysis today. Jacob, how can our viewers and listeners get in touch for more information?
You can take a look at our agmarket.net website. Take a look at our intel. We got a 30-day free trial that would be we'd love to hook you up with and make sure you see our information. If not, you can call us here at 844-4AG-MARKET. That's 424-6758.
Jacob, thank you for the time and analysis as always, and we'll speak with you again soon.
Hey, thanks for having me, guys. Have a good day.
That was Jacob Burks with agmarket.net for our closing market analysis. Let's turn our attention now to the closing numbers, courtesy of the folks at Bar Chart. May corn up 3.5 at 633.5. New crop December corn down 2 1/4 at 554.5. May soybeans down 18.5 at 1444.5. New crop November soybeans down 23.5 at 1272.5. May soybean meal down 9 even at 451.60. May soybean oil down $1.60 at 54.64. Chicago wheat down 18 3/4 at 673 3/4. Minneapolis wheat down 10 1/4 at 833 3/4. Kansas hard red wheat down 7.5 at 799 1/4. July oats up 3 even at 357 1/4. On the Merc, April live cattle down 15 cents at 162.27. April feeder cattle down 32 cents at 194.37. April lean hogs down $1.05 at 76 even. April pork cutout down $1.67 at 82.42. Class 3 milk for March down 2 cents at 18.03. And that's been a check of the ag market recap here on Ag Matters PM. We're going to go ahead now and take a quick break to hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, I will visit with Eric Raby of CLAAS. We'll talk about the current state of the supply chain for ag equipment manufacturers. This is AMPM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today I present my conversation with Eric Raby of CLAAS from Commodity Classic in Orlando, Florida. We discuss the current state of the supply chain for ag equipment manufacturers. Mark Magnuson with the Iowa Agribusiness Radio Network, and I'm joined today by Eric Raby with CLAAS. And today, Eric, I just wanted to pick your brain a little bit, talk about the global supply chain and what that means for equipment manufacturing, because we know for the past several years there's been a lot of supply chain disruptions, there's been part shortages, there's been raw material shortages. Where are we at right now in coming back from that and getting back to, being able to make new equipment a lot easier than we have been able to the last few years?
Yeah, it seems like this has been the topic of about every conversation I've had over the last 2.5, going on 3 years now. The supply chain, a lot of the things that we were wrestling with before are starting to improve when it comes to different components, different raw materials, whether it's availability or even pricing. But there are still some, I would say, sectors of our supply chain that a lot of times people might not think as part of the supply chain, like labor. Labor still remains very tight. We look at transportation and the cost of transportation. It's started to ease a little bit, but at the same time, when the price of oil goes up, the cost of ships still is fairly high. But overall, the component shortages or the materials like tires or electrical systems or things like that are getting better, but we haven't fully recovered yet.
And that's the thing, really, wasn't it? That it was a perfect storm of things working against manufacturing, for example, because it wasn't just one thing, it was multiple different factors.
It was, and I mean, if you couple this too with the pandemic that kind of got everything rolling or actually stopped everything, we had a shortage of capacity in the factories. It wasn't a material issue at that point. Then when that subsided, all of a sudden these factories had capacity, but they went through all of the materials required in the supply chain, and then that ran out. So it was kind of a stair-stepped effect, but you're right, it all came together at kind of an inopportune time and really created a lot of pressure on all aspects of manufacturing, not just in the agricultural equipment sector.
So for CLAAS, what was the process for you then? Was it to try and find ways to get these different materials? Was it trying different avenues that maybe you hadn't before to, I guess, put together this finished product?
Yeah, what it caused us to do is something that we've done for many years, and that is just have the most open and transparent communication we can with our dealers and also with their customers, but to try to heighten that even more. Everyone understood, or we wanted to make them understand, that we're not purposely holding things back. We're just trying to navigate our way through this and making everyone aware of this. Looks like this is going to be the completion date of this combine, for instance. Okay, what does that mean to you? Is that acceptable or is it not acceptable? And if it's not, what can we do? Either working with the dealer on a different model or maybe even a used machine just to get the farmers through harvest. So we were really trying to navigate on a day-to-day basis the supply chain issues. And it wasn't just one component or one raw material. It changed day to day. So we were really moving on the fly, but again, communication really helped to keep everyone abreast of what was going on.
So it's not realistic to think that we're all the way back from where we were before the pandemic, and who knows, it might not ever get back to that. I don't know. But from the perspective of CLAAS trying to navigate all those issues, get back on track, is CLAAS in a much better space now than it was the last couple of years, at least for getting to that end product?
Yeah, I mean, again, I use combines because that's the one that's closest to where we are here is the manufacturing. We actually were able to deliver all of the combines within the fiscal year, if you will, that were ordered. We did, again, have some delays or whatever, but by the end, we would have those. It did cause us to ship some machines that might have been short a piece or whatever. We could at least get it to the dealer, have it closer to the farmer, and then have that part come in, and we'd work with the dealer to install that. Not a major component, but in some cases a minor component. I think, yes, things are getting better, more stable, and I think we're going to continue to have some struggles. But I think we are all, and when I say all, the industry as a whole have learned a lot of things that we can do a little bit better, like multiple sourcing, communication, whatever. So it's going to get better.
When you think about outside of the supply chain, Eric, what right now is exciting to you about what's happening at CLAAS and kind of what you're looking forward to?
Well, I always like product introductions, just really exciting. And the machine behind us is one of our latest introductions that we did late last year, the Trion Combine. And it really represents kind of a dynamic shift in the industry and for CLAAS. Year after year, introduction after introduction, we kept making things bigger, 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 which is good. A lot of capacity, efficiency. But on this machine, we actually took a step to the side a little bit. So this is a Class 7-8 machine, where we've been really focusing on Class 9 and 10 machines because there's such a huge sector of the market that are single combine operations running a lot of acres, but they want something a little bit smaller, and that's what this represents. So very excited about that, and also a lot of new tractor offerings. Not only we've introduced this year, but we'll have some more later on in the summer as well.
He is Eric Raby with CLAAS, our guest today at Commodity Classic in Orlando, Florida. Eric, thank you so much for the time, and best of luck with the rest of the show. Have a great time.
Thank you, Mark.
That was Eric Raby of CLAAS. Let's turn our attention now to the ag weather outlook. It hasn't been the most pleasant day weather-wise here in the state of Iowa. In central Iowa, in Des Moines, we have overcast skies, and around the state of Iowa, that's pretty much a similar story. Mostly cloudy around the state of Iowa with some rain chances in different spots of the state. Tonight, it's going to be cold. Widespread rain chances around Iowa, and even a chance for some wintry mix in some places in the state of Iowa. And coming up tomorrow, cloudy with rain chances. And again, we will have those isolated areas for snow chances, but again, those are pretty light and small chances for snow. So we'll keep our fingers crossed that we can avoid any snow tomorrow, today, or tonight. That's coming up next. Let's turn our attention now to the National Weather Service and what's in store for the next 24 hours. As you can see from the National Weather Service, mostly cloudy with variable light rain chances today. Tonight, cold temperatures, widespread rain chances, isolated areas of wintry mix possible. Tomorrow, cloudy with rain chances in central and eastern Iowa, isolated areas with snow chances in parts of the state. Looking now at our affiliate weather map for tomorrow, Cherokee, a chance of snow and then partly sunny with a high expected around 38. Shenandoah, cloudy tomorrow with a high around 49. Des Moines, a chance for rain on Thursday, then mostly cloudy, high around 46. Albia, chance for rain, then cloudy, high around 46. Waterloo, a chance for rain or snow even, then mostly cloudy with a high around 44. Clinton, showers likely, then cloudy with a high around 45. For a more detailed forecast in your area of the state, check with your local Iowa Agribusiness Radio Network affiliate. And that's been a check of the Ag Weather Outlook. And that also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. You can also follow us on Facebook, Twitter, TikTok, and LinkedIn. And you can find our video content and previous episodes of AMPM on our YouTube channel. And don't forget our free twice daily market podcast, which are on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Mark Magnuson. On behalf of Riley Smith and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.